Goeienaand. 'n Mens moet seker nie verbaas wees nie as die meeste beleggers, sowel plaaslik as oorsee, teen die tyd vuisfoos rondstuier op soek na 'n veilige hawe om hulle wonde te lek nie. Die afgelope weke moes hulle toesien hoe die een op die oog af stabiele beleggingsmark na die ander in chaos en onsekerheid gedompel word. Die krisis op die valutamarkte het swerms beleggers genoop om skuiling te gaan soek in die effektebeurse en selfs in 'n mindere mate in goud. Maar die beurse moes toe self sorg vir politieke en ekonomiese onsekerheid en swak maatskappyuitslae. En wat doen goud? Die metaal het relatief gesproke feitelik nie 'n vinger verroer nie, ondanks omstandighede wat tradisioneel gunstig vir die metaal was. En so nou, waarna toe nou? Ek hoop dat ons paneel vanaand meer insig kan verskaf. Our guest tonight is a major player in the country's energy industry. South African energy giant Engen, a member of the Gencor stable, this week reported good results despite the constraints of a weak economy. Rob Angel is Engen's chief executive. Good evening, Rob.
Good evening, Cobus.
Our guest panelist is Finance Week Deputy Editor Howard Priest. Good evening, Howard.
Evening, Cobus.
And then our wise men of the market, Peter de Tooy from Momentum Lewens. Goeienaand, Peter.
Goeienaand.
And William Bowler of Ferguson Brothers.
Good evening.
Our market discussion tonight will focus mainly on the currency markets, gold, and the share market. One had hoped that some clarity would have returned to the forex markets by now, but the turmoil continues. Will the Fed ease? For that matter, will the Bundesbank? By last night, the Bundesbank had made it clear that it had no intention of easing in the short term, and the market's pressure on other currencies continues. Pressure on the dollar is being compounded by poor American indicators and by vague statements from the Fed, giving little indication whether it intends easing or holding at present levels. And that's what happened to gold. After failing to crack the 350, 352 level, investor disappointment started dragging the metal down again. Then came additional pressure from producer and Middle East and Swiss selling, and it is rumored sales by the Reserve Bank. And now the market's also being weighed down by fears that American investment funds will start dumping gold they bought in the wake of the currency crisis. And if all that made you look at the stock market with hopeful eyes, well, most markets came under pressure this week, and today Wall Street went south again, followed rapidly by the JSE, which shed an overall 63 points, not yet reflected on our graph, to a 90-month low of 29.26. That's 22% down from June's peak. Wall Street quoted heavyweights, De Beers and Anglos dominate the JSE's overall index. And the beating that especially De Beers took today helped to drag the rest of the JSE down. Right now on Reuters, we have gold at $341 and $341.50. We have the dollar at one mark, 45, 40 and 50. William, well, let's look at the dollar first. You feel it's more or less reached a bottom now, or does it have further downside potential?
Yes, Cobus, you know, the story of currencies is often a story of interest rates. And what one has seen for some time now is a position where the dollar has been weak relative to the Deutschmark, simply because interest rates in the US have been low, whereas interest rates in Germany have been high. And so accordingly, international investors have tended to push their funds more towards the Deutschmark than towards the dollar. But you know, interest rates are a little bit like women's skirts. They can only go up so far before they have to start coming down again. And we believe that possibly that's the sort of situation that one is seeing in Germany now, that already the Bundesbank has cut its official Lombard rate very cautiously and very slightly to start with. And I'm sure certainly the decline will be gradual at first. But to our mind, at my firm, certainly we believe that the interest rate differential between Germany and the US is now as wide as it's ever going to be, that differential will narrow over the course of certainly through 1993, and that the dollar will strengthen relative to major European currencies, particularly the Deutschmark.
You don't expect the Fed to ease?
No, I think the Fed has probably got to a point where it's eased successively now for some time, and another interest rate cut at this stage doesn't look like it's likely to achieve much. And I believe that if it was going to happen, it would have happened by now.
Peter, you've developed jy het daarom 'n reputasie by ons ontwikkel so half as die ewige goudbil. Is jy nog so positief oor die
metaal? Graag. Ek dink dat mense gaan so dink nie, maar ja, kyk, goud hy volg nie kommoditeitsmarke op die oomblik nie. Sy monetêre rol is maar baie beperk. En daar sentrale banke wat nou goud verkoop as gevolg dat hulle soek vir likwiditeit. En ek dink ander beleggers ook as gevolg van dalende wêreldbeurse, die sentiment is teen goud, en as hulle goud het, gaan hulle verkoop. En dat is 'n korttermyn beweging, maar glo nog steeds in die medium te langer termyn gaan goud weer sy regte rol begin speel.
Maar watter faktore moet hier in die spel inkom? Want ons het al in die verlede gesê dat die een groot ding wat gaan gebeur om goud deur die dak te druk weer is 'n monetêre krisis internasionaal en ons het hom nou net gehad en hy het niks te doen nie.
Ja, ek weet nie dat dit is die begin van 'n monetêre krisis of gaan gesien word. Jy weet, in die 60e jare ons dieselfde ding gehad as toe die Britse pond gedevalueer het hier in Desember of November 67. Ons onmiddellik 'n groot vraag vir goud. En toe die goudprys het gestyg. Hy het gestyg in die korte termyn na amper $39 en toe gaan hy weer terug na $35 toe voor die werklike styging weer begin het. So daar's altyd 'n sloering en ek dink hy is nou geaffekteer soos beleggingsmarkte wel gedaal het in 1969 het hy saam met die markte eerstens gedaal en toe het hy gedraai. So ons is net gevang in die korte termyn, maar dit wil nie sê hy kan effens laer nog beweeg nie as gevolg van die wêreldonsekerheid in beleggingsmarkte. Maar hy sal weer terugkom. Hy's 'n baie klein presentasie van beleggingsportefeuilles op die oomblik. Hy kan net verbeter.
So going back to the market, would that be a sign that one should be looking at certain of your gold mine shares to presenting good value?
Yes, look, I'm not sure that I can be as, certainly in terms of the dollar gold price, that I can be perhaps as bullish as Peter is, but if the dollar itself does strengthen, I would expect the dollar to strengthen against the rand as well. So it's in terms of the revenues to our mines, the actual dollar, the gold price in rand terms, which they receive as revenue, should be better over the next 12 months or so. So I would think gold shares, certainly on that basis, do have the capacity to do a little bit better.
10 seconds. What do you say to somebody right now who says, well, where must I put my money?
Ek langer as 10 sekondes nodig daarvoor. Ja, kyk in die kort termyn, daar is geleenthede in die mark, maar as jy net nie daar moet geduld wees. En as jy nie daai geduld het nie, dan moet jy liewers in kontant bly tot tyd en wel die mark werklik gedraai het.
Well, okay, we'll be back in a moment with the latest news on our portfolio. Welcome back. With the preponderance of commodity-linked index shares in our portfolio, we've been on a hiding to nowhere for some time now. We've received recommendations from one of our panelists, and these will be in place by next week. Let's hope that helps. Meanwhile, we're almost 3 percentage points worse off than the overall index. For technical reasons, this graph reflects the position up to yesterday. It'll look much worse after today. The main losers have been De Beers, Anglos and Amic, while the only shares still in the black is Liberty, with Richemont only just in the red. William, where do we go to from here?
Cobus, I think certainly the agonising debate as regards the portfolios is what to actually do with Anglos and De Beers, because when one looks at the share price performance through the course of this year, De Beers is now less than half its price at the beginning of the year. Anglos is down about 40%. Most of those losses have occurred basically since about August. And really now one has to decide, does one bite the bullet, sell them on the basis of being confident of achieving better returns elsewhere, or does one adopt the attitude that they've fallen so far that it would be a bit like throwing the baby out with the bathwater, and that therefore one should actually be riding with them and waiting for their recovery? And I'm sure eventually they will recover, certainly. But frankly, I don't actually know quite what that decision should be. I don't know, Peter, what you might think about it.
Yeah, I think you said quite frankly, you don't know what the decision should be at the moment. I think this is the big problem with the market, because is it just a mere cyclical aberration that's occurred in De Beers with the question of world diamonds, or is it as a permanent break in the traditional way of doing business? If it is the former, then you're actually throwing out the baby with the bathwater right now. You should not be selling because the market is exaggerating the move. A stock has fallen from $32 in New York to just above $10 this evening. You don't suddenly wake up and say, now it's time to liquidate it. However, if it's a major structural change, then there's other consideration. Nevertheless, one must at the moment recognize that these companies are a significant discount to the underlying asset values. So I'm inclined to be a little bit more cautious about doing the switching at the moment and just have to hold on and just to see and wait and see what happens, because the damage has been quite severe already. I mean, you can see the result on the portfolio.
Will it?
Yes, I think I would go along with that, certainly. I mean, the falls have been very severe, and yes, they could very possibly be in oversold position now.
Thank you very much. Back in a moment with tonight's special guest, Rob Angel of Engen. Send your views or questions to Diagonal Street, Private Bag X41, Auckland Park, 2006. Stuur u menings of vrae aan Diagonalstraat, privaatsak X41, Auckland Park, 2006. Back again. South African integrated energy giant, Engen, provided some relief this week in the midst of general doom and gloom surrounding the country's economy. Turnover for the year ended August rose by 7.6% to 6.5 billion rands. Net income is up 50% to 429 million rands. Earnings per share up by 18% and dividends per share up also by 18%. Income was boosted, among other items, by a rights issue, a 44 million rand transfer from the inventory reserve, and the creation of a tax equalization reserve that helped the company to reduce its tax. Now, Rob Angel is Engen's Chief Executive Officer. Welcome once again.
Thank you, Tim.
Looking at your results, though, there's one factor that could perhaps be a worrying one, and that is that you mentioned that your turnover increased mainly because prices increased. You didn't really sell that much more product. Is there anything really in the pipeline at the moment that's going to help you to sell more product for the next year?
Cobus, just before going to that, I noticed just before we came on air that you put on a post box to send in suggestions on your share portfolio. I think it'd be a good idea if you put some Engen shares into the portfolio, don't you? On your
that'll cost you some advertising.
On your question, Cobus, our volumes went up by about 2.5% inland South Africa, and that actually was quite a mixed bag. We had some very pleasing results on gasoline or on petrol, up by 4%, and I would guess that would surprise most of your viewers that the petrol could grow at 4% with the economy being somewhere negative. On the other hand, the diesel demand was down about 2% for the third year in a row, and of course this reflects the general economy and the agricultural sector. I'm sure you'll be interested to know that over the past 2 years, diesel demand in the agricultural sector has been down some 13%. This has just been the impact of the drought on our business, and of course it affects every other business. As we look forward, I guess the key to our business, as it will be on most businesses, is the economy just has to get a kickstart. And that, I would guess, has to start from the political scenario. We've got to get more business confidence into that sector. And then I think it will take off from there. The rains appear to be coming on time. So as we look forward, I think we can look with some degree of confidence that volumes will increase in the coming year. The area that we have been particularly pleased about is what's been happening to our export volumes. And it's not covered in the text, but our export volumes over the last 12 months increased by 80%. So they now represent some 10% of our total sales, and that's a very encouraging figure for us. They've actually gone up 5 times in the last 2 years.
Where do you export to, though?
We're exporting to most countries, sub-Saharan Africa, up the middle, and particularly on the east coast, and the Indian Ocean Islands. We're exporting now to about 16 countries. It's quite a feat.
Rob, there must statistically be more people watching this program who have an interest in the petrol price than an interest in the Engen share price. And if they look at the Engen results, they might well feel that the company is doing well because it's able, in a sense, in a cooperative situation with government, to increase its prices in a recession economy. How would you answer those people?
Well, that's a very pleasant question, thank you. I was assured that this was a nice discussion panel. But I think what we're seeing in the petrol price is something that pretty much tracks what's happening internationally. The petrol price in South Africa pretty much parallels every international price. We, in fact, could put a case forward, and I'm not about to do it tonight, of course, that we're actually under-recovering on our return on investments on the marketing assets as the formula currently applies. To be frank, we were looking for the previous 4-cent per litre increase to be effective from January 1 of this year. And of course, it only came through on July 1, and that had quite a significant impact on our earnings.
Just going back to Cobus's first question about the outlook for this year. Of course, you've got a lot more capacity now at the refinery as a result of the Phase 1 expansion. And I would assume some of the growth will come through the additional throughput into that capacity.
Right.
But looking at the results for the past year, a lot of the growth came from financing income as a result of the income on your rights issue proceeds. Now, one assumes that that income will be down a touch. So will the additional income coming from the throughput from the phase 1 expansion be sufficient to compensate, hopefully more than compensate, for the drop in financing income?
Yeah, William, we would be certainly looking for it to more than compensate. As you say, we've got about a 30% increase in capacity of that phase 1 expansion, plus some upgrading of high-value products. There's no doubt the capacity will be taken up. We're running flat out as we sit here tonight, both for inland demand now that we've taken on the Trek processing, which I think you're familiar with, that was with the Shell BP refinery. So we're enjoying the incremental margin on that. And of course, we'll now be able to follow up and boost our exports even a little bit more. So we're expecting big things out of that expansion program.
We're talking about capacity expansions. You've had, I mean, you have fairly ambitious expansion programs still to come through in years to come, but then so does just about everybody else in the local industry. Do you foresee a situation that there will be overcapacity?
I think that's something that clearly the industry will keep its eye on. I think that probably Engen is the only one looking at the next phase of refinery expansions. And given our outlook on current petrol demand, I would expect our expansion together with the other 3 refineries probably to be absorbed by about 1996, 1997. Diesel will tend to be long, and I'd expect our competition to be exporting that into sub-Saharan Africa just in the same way as we are.
Rob, the development of Engen as a company, that's one of the bigger companies, largest companies quoted on the Johannesburg Stock Exchange with capitalization $6.5 billion. If you look at your company and you look at the thrust up into the next century, is that where do you see the prime sources of growth coming from existing activities, acquisitions, or development of adjacent areas, sort of chemical products?
Okay, I think, to quote the famous general in the Middle East War in Desert Storm, I would say all of the above, Peter. But to look at it realistically, I think our growth prospects in South Africa will be organic, fairly slow. We would certainly look to sub-Saharan Africa and the downstream business for fairly significant growth. We would expect to build somewhat on the exports that we have currently. I've mentioned already that they constitute currently about 10% of our business. I would expect to see that get to about 25%. And a major part of that, Peter, will be to become part of sub-Saharan Africa, not have South Africa dominate the other African countries. We want to be part of the other African countries. So you can expect to see us make acquisitions in infrastructure north of the Limpopo over the next few years.
2 quick ones, Rob. There's a lot of pressure for deregulation of petrol prices in South Africa. If that comes about, to what extent that would affect you? And secondly, the cost of changing your mobile to Engen, I think it's going to cost somewhere around 130, 140 million rand. Was there ever a chance that you could have kept the mobile name and sort of paid a franchise cost for it, and did politics affect that?
Okay, I've now got about 4 questions in front of me. Let me try and tackle them one by one, and maybe starting with deregulation, and certainly Cobus, to tackle that issue in the few minutes we have tonight would not be possible. Let me just say that certainly Engen would support deregulation if and when it comes. There are a number of factors in South Africa which I think is going to make it difficult to introduce things like the support for the synthetic fuels industry, the introduction of self-service, and so on and so forth. I think the industry in South Africa has unquestionably been well served by the structures around it over the past 20-odd years. Today we're living in a very competitive market in South Africa. I think the commercial part of our business, that is sales into sectors other than the service stations, is probably the most competitive of any market that I've worked in the 6 countries around the world that I've been in. The refineries are absolutely world class, with the possibility of not having quite the capacity, the economies of scale of some of the big refineries in Western Europe in particular, but we're going to get there. The impact on us, if it comes, you can rest assured that Engen will be ready, and every day we do a little bit more planning for it. But it's a complex subject. A lot of things have to be taken into account. There's a lot of interdependence between the oil industry and the synthetic fuels industry that has to be addressed. On the Engen name change, the bracket of investments that you talked about is pretty accurate. I'd expect it to be somewhere between 130 and 150 million rand by the time we get through with the program. We're very encouraged by what we're seeing on the ground and the feedback that we're getting. I think the advertisements are going down particularly well. We're going to follow them up. There's still another 2 to come for our audience. We're seeing volume increases at the sites on the ground, and as we sit here this time next year, there'll be some 800 service stations. Your question specifically on could we have kept the mobile name? We tried that. Obviously, it would have been much easier for a number of us. I haven't got many more hairs to go grey, but certainly some of my people do. It would have been easier if we could have kept the mobile name, but that was just not possible. Mobile Corp, as part of the agreement of sale, insisted on the name change being effective.
Because of politics?
Yes, because of politics, and we had the name for 5 years. It ends in July of 1994. We've certainly been back to Washington DC to talk them about retaining the name and paying a licensing fee on several occasions, but at the end of the day that wasn't possible. So we're now into Engen, and with us you'll still be number one.
Yeah.
Rob, I think it's interesting to look at the rating of your share on the JSE relative to the ratings of international oil companies on their markets. And what is particularly interesting is the contrast in that Engen trades on the JSE on a PE multiple, which is at a premium to the overall to the industrial index, whereas generally oil companies internationally tend to trade in price earnings multiple terms at a bit of a discount to their average market indices. And that seems to reflect the expectation that investors have here that you can produce stable and very consistent earnings growth. Now, following from that, I believe you have said in the past that you do plan for the day when something like half of your crude needs will be met from wells in which you have some participation, which introduces a more sort of volatile element, a sort of exploration spend that is required, and a more volatile earnings pattern. Do you see that as a problem in terms of your rating?
No, William, I don't. I think the reason we've got the rating that we currently have is that people rightly see potential in Engen being able to keep moving ahead, refinery expansion and so on. On the upstream part of our business, I think generally speaking, and almost without exception, apart from the last 12 months, the upstream part of the oil business and the downstream part tend to be counter-cyclical. And in fact, if you look at the international majors, you'll see these cyclical swings with upstream and downstream having different peaks and troughs. So in fact, part of the strategy would be to balance the downstream earnings by going upstream. But of course, there are at least 2 other factors why we would want to do it. We see it as being strategically important to have our sales in South Africa, our crude runs in our Durban refinery, supported by a certain level of our own crude supply. I think that made strategic sense for Engen, and it would for South Africa. And of course, secondly, it's an area of natural real growth for us. It's a very
we've only got a couple of minutes left, and you guys wanted to get to Moscow.
You have the management contract for Moscow. Many people say that Moscow is a white elephant, a very expensive white elephant. Fair or unfair?
No, I think it's, generally speaking, it's unfair. It was done, as you all well know, at a different time in history in South Africa for very different reasons. If one looks at it in isolation today, yes, it could be classified as a white elephant, but there were different reasons a number of years ago. And I think it's done a number of things, good things for South Africa. It's provided a huge number of jobs. It's got some potential for further expansion, for possible integration of the chemical business and so on.
But would that trust come from integration with the, as you see, Moscow into the chemical business?
Yeah, I think one day, Peter, that one could see Moscow being an integral part of a chemical business. I personally think it will be quite some way down the track, somewhere closer to the year 2000 than 1995 or 1996.
So you won't be investing heavily in chemicals in the near future?
Well, we don't see that. Before Engen moves into chemicals, I would want to see a larger local demand to be able to take up the huge investment that's going to be required, and that we don't rely in the initial years for exporting some 70% of chemicals products. So we're taking a fairly cautious view on a big leap in the chemicals, because we see it in that sort of time frame.
Rob, just the
on the close, Peter. Sorry, I've got to interrupt you here. It's all out of time. Rob Angel, thank you very much for joining us tonight. Thank you, panel. It's all from us tonight. Next week, we talk to Grant Thomas of Melback, another member of the Genco Group. Who knows, one of these fine days, we may even succeed in snaring Brian Gilbertson. You hoop beskaam nooit. Goeienaand.